Massive cable news that broke in the last hour, according to Dow Jones Industrials and Dow Jones Newswires. Cox Communications, David, may very well be putting at least a bid in for Time Warner Cable. So they join Charter and they join Comcast in this battle for that.
Meanwhile, I'm just trying to pressure some kind of gain on the Dow, just managing to hold on to the green strokes there.
Well, let's get to the market action because it was rather interesting today. We have Ryan Dietrich. He is Schaefer's Investment Research Senior Technical Strategist. So he just looks at the charts. He looks at the technology of it. He doesn't get emotional. He predicted the market rally we saw in September. And guess what? He's still bullish. He'll tell us why. And Larry Shover joining us from the pits of the CME. Larry, we begin with you. Not a win, at least at the moment, for the S&P 500 at 1802. We needed to see 1804. But once again, the transports and the industrials looking very healthy.
Absolutely. The market has tried so hard today to get positive, to stay at least flattish. I mean, on low liquidity, low conviction, low volume, really a big gain behind me when you think about it, especially relative to what's going on around the world. I mean, the Nikkei was down 0.75%. We had Europe down about 30 basis points on the day. Mexico, Canada down 0.5%, and Brazil down a full point on the day, and yet we're flat. I don't know if that means anything. I don't know if it says anything, but it's really good to keep note of that.
Well, here's somebody who actually likes it when the sentiment is not bullish, and that's Ryan, because, Ryan, when folks get worried about us reaching top heights and you see pullbacks, even mild pullbacks like you saw today, you like it because you remain bullish, and you're just waiting for that negative sentiment to go in and buy more, right?
That's right, David. You know, building on what Larry just said, we were flat today, but look under the surface. We've liked small caps for a while. The Russell 2000 was up almost 1% today, so there's some underlying strength there that we really like. But you're right, we're making new all-time highs, or we're flirting with it. Look at the recent AAII poll that just came out this week. We had the lowest number of bulls we saw since late August, and we're worried about Syria. So again, there's some optimism out there, but we continue to see a lot of shorts that are out there, highest level of short interest, and if you look at S&P 500
well, let me interrupt you guys because
so
hold on one second, Ryan. I want to interrupt because Hewlett-Packard's numbers are out, and as we parse through them, it's not a big short position at all on this one. It's been a very nice performer, at least for the first 6 months of 2013. And, we're looking at a stock price now, if we can show the bid and the ask, that's moving higher above the closing price, David, 25.09, and the bid is 26, the ask 26.14. What we want to hear about are the printers and the printer market and whether that PC market is stabling, but people are not counting this stock out here.
This, by the way, is the world's #2 PC maker behind Lenovo, and again, it's kind of a dubious distinction to be number 1 and 2 because, as you know, the PC market has been falling. So there are questions about what Hewlett-Packard could do next. Is it stuck with that moniker of a big PC maker, or can Meg Whitman, who's done a terrific job, Liz, at really making sure that the finances are in good shape? It is a lean operation now. The question is, what did they do next? What did they do beyond the PC?
Well, can I just say, though, props to Meg Whitman. The annual low of this stock, you ready? Look at that 25.09. The annual low, $12 and change. So with very few, exactly, right, Larry? I mean, with very few exciting products, and I don't mean that in a negative way because we're still waiting for them to even enter the phone market, at least in a meaningful way. This is a stock that has come back fighting. Joe Ling Kent has the numbers for us. Joe. Okay. All right. Never mind. 1 second as we continue to go through this.
By the way, one thing that the HP board has just declared is a regular dividend, a cash dividend of 14.5 cents per share in the company's common stock. This is something we've seen quite a bit of recently in order to lure more investors in. There are questions, though, and we're going to be watching for this on server shipments. HP has seen its server shipments decline for 8 straight quarters. Some people thought that was going to turn around with this quarter development.
It's a beat on both the top and bottom line, David. The bottom line is a beat by, I believe, a penny. And as we look at the revenue, it's a wide margin of a beat, coming in at $29.13 billion versus $27.91 billion. Larry Shover, what does that say? It's a Dow component. It's a hardware company. It's a company that's in Silicon Valley that's been around forever, and don't count it out.
Yeah, I mean, a stock that was left for dead, 14 3/4 on January the 2nd. Meg Whitman is the bomb. I mean, she has laid out a plan. It's not even close to being done. I mean, we talked about the stability of the PC and printer market. That's not left for dead. I mean, it is stable. And beyond that, we all know that enterprise and service is where the money's being made right now.
Indeed.
They're not there yet, but they will get there. And that's the whole point of the story. And it's funny when you look at revenues, EMC, Cisco, both fall very short. That's been the hallmark for techs, and they beat on the revenue side. You have to buy the stock. You have to own it.
Well, I don't know if you do, and that's the question that a lot of people are asking themselves. Clearly, after-hour sentiment, Ryan, is very much in HPQ's favor right now, but PCs represent about 28% of their sales. We have seen PCs going down steadily.
Yep.
What can HP do to separate themselves from that downturn?
Well, you know, that's great question. A lot of people are getting paid money to figure that out. You know, yeah. To me, what we do as Schaefer's is we look at the option sentiment. One thing about this name, there were a lot of calls traded on this the last 10 days. So to me, you know, I'm not saying someone knew something, but people expected a pop. So the big thing is we've seen this before with tech names specifically. We get these pops up, and with all these calls, you know, sometimes they can kind of pull back down just as quickly. So I want to see, you know, if we stick. But specifically looking at this, you know, the bottom line is they have to continue to improve. They have to continue to show that revenue growth. And look what Cisco did. The fact that they were better than what Cisco did, at least right now with the revenue growth, I like that, and that's a good sign, I think.
Yeah, I would think so. Let's just get back to the markets, though. Again, record territory, Larry. Very important to stress that the volume is very thin right now. There aren't a lot of traders or participants in the market at the moment. But as we go into that first week in December, I don't want to say it's a given to see a Santa Claus rally, but, you know, a drop-off today, intraday, we still saw that gain, but we were as high as up more than 45 points.
Yeah, exactly. And I think next week is the last big week of the year, per se. I mean, we have the jobs report, the last jobs report we'll see of the year. We have the ECB meeting coming out. We have some same-store sales in the retail sector, et cetera. So it could be a very big week. And with the lack of liquidity and volume, people taking vacations, I mean, it's just going to be death for all kinds of air pockets in the market. But it's a big week coming up December 2nd.
Okay, I want to go back to Ryan. By the way, TiVo is out as well after hours. Let's just look it up right now. TiVo is doing after hours a little better, but not that much movement on TiVo after hours. So TiVo had good earnings too, but nothing like HP. Ryan, in addition to announcing correctly that the September fallback would not happen, a lot of people thought that in September and October the market was going to pull back. You didn't think it was. You also have been very bullish on some stocks involving steel and iron ore. And I want to talk about one of them before we leave. Cliff Natural Resources. It's way off its highs. If you're looking for a bargain stock, this might be it. Explain.
Well, that's right. You know, we look at steel in general. We know they did very poorly the first 3 quarters this year. Now the fourth quarter, they're starting to show some life. But, you know, CLF, Cliff we like, also U.S. Steel's another one. Kind of the same pattern, starting to show some upward price action. But what do we also see? There's a lot of shorts betting against those names, also a lot of bearish puts. Now, what's that mean to someone listening? That's negativity. That's potential buying pressure should any positive news come in.
You love to see that negativity in there because that gives you an opportunity to buy more. And Cliff Resources, you certainly see. We got to leave it at that, guys. Ryan Dietrich and Larry Shover, thank you very much. Appreciate it.